going on, DeRosa Insiders community? This is Matt Faircloth, and welcome to DeRosa Insiders Live. Guys, great guest here. This is someone I've known for a couple of years. This is someone who is on the move, on the grow, someone you might have heard on other on the podcast circuits, and that we're going to talk about a lot of different things in that. Let's just talk, because I know this person pretty well, so we're just going to hop into a great conversation. Hey, Scott, how are you?
Hey, good, Matt. How's it going?
I'm doing well, man. Good to see you today. Sorry about the Eagles loss. I know you're an Eagles fan living down there in Philly, so didn't get a chance to chat about that yet, guys. But my New York Mets pulled one out and won one in extra innings against the Nationals yesterday. Closed the gap one more against the Braves for the wild card seat. Just so you know, in case you're watching.
You're in the wrong part of the country, part of the state.
Here's the thing. You're right. I am. You're right. I am. I'm in the wrong state, wrong part of the country. But I'm married a Mets fan. And so because of happy wife, happy life, Scott, I root for the Mets because it makes my wife and my son very happy. So that makes me a Mets fan and kind of don't care what happens in pro football. So my son is a Kansas City Chiefs fan, believe it or not.
I respect the loyalty.
The
source of fandom.
Yeah, my son's a Kansas City Chiefs fan because of the Super Bowl a couple of years ago. He just didn't want to root for the Eagles, so he became a Kansas City Chiefs fan. So now he's got a jersey. Before that Super Bowl with KC and Philly, my son had the KC logo shaved in the side of his head and went to a New Hope, Pennsylvania school with the KC logo shaved in the side of his head before the game. So I was like, son,
that's bold.
So that's ballsy, buddy. What if they lose? Well,
it is.
We got
to hang out.
He looked like a fortune teller that day. So good to have you on DeRosa Insiders Live, man. I want to unpack a few different things here. So why don't we just jump in? You have a thriving business as selling medical sales, right? You're a medical sales rep selling medical equipment to docs and surgeons all across the country, and that kind of thing. But you're also a thriving real estate investor, right? How are you able to balance those two things? Because I think that a lot of our audience are also, to be straight, they're trying to probably wear multiple hats. Everybody's got a couple of hats on their hat rack these days, right? So what are some tips and just what's it like? Maybe let's start here. What are the pluses and minuses in having that, thing that generates maybe more regular income, and then your real estate investing thing as well? So what's it like?
Yeah. So it's always been kind of, started out, it's always been more of a struggle, or it started out as more of a struggle, but I've learned to kind of integrate the two. And I think that's been the key from the beginning is, I where focus goes, energy flows. So I try to time block and prioritize large chunks of time to each, which is certainly easier said than done.
Are there is Tuesday real estate investing day, and then Wednesday is other? Do you kind of compartmentalize your days that way? Or how do you give me a typical day in the life of Scott? Or I get this probably not a typical day given the amount of different things you're in the middle of and things you're growing and building right now, right? But what does a typical day segmentation look like for you?
I've thought about segmenting it that way.
Yeah.
It doesn't work that way. As you know, things come up and some are more urgent than others, and you have to dive in and address that particular thing. So, but what I try to do is just time block certain parts of my calendar for certain tasks and projects. So I do it the way. I split it up, as strategically and as intentional as I can.
Mm-hmm.
But, and then, obviously the evenings are easier to allocate to some, real estate business development type of activities and things like that, and networking and so forth. But the way that the shift, there was a shift at which point it became easier to navigate the two. And one was a mindset and two was just an actual, I guess they were kind of both of a perspective. But the one was starting to view my sales job and my earned income as investor number one in my business, and applying that mindset to going out and, giving that job everything I can while I'm working on it with the intent of earning more so that I can invest more.
So can you tell me more? You said it's investor number one in your business. So is it you're investing in that sales job so that it can produce time for you as the deliverable, right? So it gives you dollars, but also those dollars buy you time, right? Is that the result that it gives you? And we can unpack, like, there's a lot of other stuff that I know that sales job gets you, but is that, when you say it's your best customer, is that the deliverable we're talking about?
For sure. Yeah. But
Okay.
also the other half of that, which plays into it, is the integration of two. Instead of trying to run my sales job and then run my real estate business, I was like, how can I integrate the two? And the way that I've been able to do that is what I do in real estate can also benefit pretty much everyone I speak to,
Mm.
you know, in my day-to-day sales job. I'm speaking with doctors on a regular basis. I'm speaking with colleagues that are also salespeople that are, they have their earned income that they want to invest as well. Oftentimes, the top producers are top earners, and they have some capital to invest. So when I kind of shifted my mindset to that,
Mm.
and how can I integrate real estate conversations into my sales conversations, and just shows that you're doing something other than just trying to sell somebody something, or
Yeah.
it's fun to talk shop with colleagues outside of work related
Word.
things. So those are some ways that I've been able to integrate everything. So but by doing that, it all kind of blends together a little more, and that's helped as well. The other advantage is I don't dislike my sales job. A lot of people, especially starting out in real estate investing, they're doing it to escape a W-2 job, or the rat race, as you'll say. But I'm fortunate to where I like what I do, so I don't necessarily have my back up against the wall trying to get away from it. So that's also allowed me to continue to find ways to integrate the two.
I got to tell you, Scott, that you hit it spot on. And I've had people come to me through all the different circles and stuff. Be like, I want to get in real estate investing. I'm like, great. Okay. Why? Because I hate my job. Right? I'm like, listen, I'll tell you this right now. If you hate your job, just go
Yeah,
get a new job. That's it. I mean, there's plenty of companies out there hiring right now,
yeah,
right? There
for
is a
sure.
fulfilling job for all of us out there, and that. But real estate investing should never, ever, ever be the solution for someone that's simply looking for a new career away from a job that they hate. And that, what I like about I like a lot of things about what you just said. I want to underscore a huge thing for all of our listeners here, in that, like, what if, again, if you've got a job that you don't like, what if, instead of, like, trying to quit your job so you can invest in real estate full time, what if you did what Scott's done and find yourself a job that, as I understand it, Scott, and I've talked to you at length, you don't, it's not like what you do in your sales position. It's not even a job. It's like you're like a sales rep, and you kind of own your calendar. You're not responsible Monday through Friday, 9 to 5. I get it. If a client calls you, that's money on the line. You got to take that call. I understand. Those are dollars, right? That's your first investor. Love that analogy. But you're not beholden to a 9 to 5 arrangement, correct?
Correct. I'm in a unique position where I'm independent, so
Hmm.
technically I'm self-employed.
Yeah.
We have contracts with manufacturers, so we represent them directly. So there's certain requirements that come, and things we need to do to maintain those contracts, obviously. But to your point, yeah, I schedule my meetings around my preference of scheduling.
Yeah. I got to tell you though, like, the idea of careers that are detached from the 9 to 5 calendar is becoming more prevalent in the world, right? And there's other careers that are out there that have never been attached to a 9 to 5 calendar. Like, I'll think of one off the top of my head, being a realtor, right? A realtor selling residential housing stock is not 9 to 5. I think it's actually it's the opposite of 9 to 5, because a lot of the clients that are going to be buying a home for them to move into with their family, they have a job between 9 and 5. They want to talk to you. They can't. They're busy. They're working, right? So, other careers for the listeners out there, for you guys to consider, if you want to get into real estate investing, even part time, full time, however you want to do it. What if you were able to detach yourself from your career that you have now, and detach yourself from the 9 to 5 commitment, right? And you still keep your lights on, keep your personal obligations paid while you build a real estate investing business. It's an inspiring path. right? Because Scott, as you know, real estate investing can be a small trick. When I first got started, as it probably was years ago, when you first got started too, it's a small trickle of income in the beginning, and that trickle becomes a stream, and then a river, and then and it becomes more and more as you go. But real estate investing doesn't pay very well at first, does it? You typically need something else to keep your lights on in the beginning. That's why I really love this correlation.
Right. Yeah. Especially if you're, long term buy and hold, value add investor like us. The
Yeah.
return doesn't come until you go full cycle on that deal, especially if you're bringing on investor partners and so forth.
Yeah. I'll give one more possibility for you for listeners here. And this kind of goes to where Scott was going here about like long-term buy and hold, right? What if, Scott, you had somebody, let's pretend we've got a potential avatar here in front of us, potential coaching student or whatever, and you say, I want to quit my job and I really love construction, I love renovations, that kind of thing. What I would say is, okay, if you don't want to be a realtor, you don't want to become a traveling sales rep and just do like, freelance sales like Scott's doing, maybe pick up a couple of fix and flips, right? Maybe get a few investors to join you as potential lenders, potential joint ventures, maybe go get some hard money and go buy some bank foreclosures and renovate them and resell them. That, friends, is not, I even can argue deep, right? Some folks may not call that real estate investing, right? It's not, because it's not going to get you a residual check. But what it will do is if you do that fix and flip properly, it'll put a big fat check in your pocket that you can live on for a while. And it's certainly, if you only have one or two, three of them, that's not going to be a full-time gig running those 3 fix and flips. So you could also build a real estate investing long-term hold portfolio while you run a couple of flips. That's what I used to do when in 2010, 11, 12, 13, right after the crash. I made my living with a couple of fix and flips going at a time and a rental portfolio that I was building and growing. And the intention was to live off the money from the fix and flips while we built long-term wealth with the rentals. So let's transition. There's another side of what you do that makes it beautiful for real estate investing, and that the clients you're in front of, and this listeners, you guys want to consider that too, that, if you're going to put yourself into a freelance space, well, you want to be around people that maybe might have an interest or a conversation in real estate investing. Like a realtor might be able to, land an investor from a real estate sale, or might be able to pick up a fix and flip or whatever. If they're a realtor, they can wear a couple of different hats. For you, let's unpack a little bit about how you're able to tie in your daytime opportunity with your sales job into your real estate investing. How does that work out for you?
That's good. I mean, it's helped us to fill our database with additional contacts. It's really just another source of contacts. And, the name of the game as far as raising capital is letting people know what you do, helping to educate them, and, kind of just putting it out there. And, once people become interested and want to learn more, then you can get into some deeper conversations. And oftentimes, that's what happens. And they don't know that there's an opportunity there unless, you share that with them and you can show that you can provide them value in that way. So for me, it's just, it's really just talking about what else I'm doing outside of work. It's no different than talking about sports or talking about, what shows or movies you're watching, it's, or what hobbies you have, it's just another topic to, bring up. And, some people are more interested than others, and want to, talk shop, and, those that aren't, then, you move on to the next topic. But, it's as simple as that.
You make sure they know.
I don't overthink
you make sure
it.
These
I don't
folks
really
in the medical world know. Yeah, you make sure they know what else you do, right? I'm sure you throw it out there like, oh, after my meeting with you, I've got to go check on my rental property, right? I'm buying an apartment building. Would you like to, just so you know, that's what I'm doing. I totally get it. Yeah.
Yeah. You'd be surprised too at what you learn about others, and you never knew that so and so also had 20 rentals portfolio, and you've only known a few things about them, but you uncover a lot, and you open up some new conversations.
So tell me what your real estate investing strategy is these days, target. And I know I'm asking you to tell our listeners here, because I know you're one of our accelerator students and that, which I'm really grateful to have you in our community, because you guys are you and your partner, Todd Silence, are making it happen. Give him a little plug there too. You guys are making it happen. So what's been your strategy, your initiatives, those kinds of things? Let's unpack that a little bit.
Yeah, so we're primarily focused on multifamily in the Lehigh Valley market, which is about 45 minutes north of Philadelphia and about just as far from New York City. If you're not
Hmm.
familiar, Allentown, Bethlehem, Easton, you may have heard of some of those towns. So that's the market in our backyard. I live in Philly, so I also have some properties in the suburbs of Philly, but the majority of our portfolio is in that Lehigh Valley. So we're targeting 20 plus unit value add multifamily deals in that market. We are shopping in other markets, including the Columbus, Ohio market. We haven't landed a
Hmm.
deal yet, but we have under a ton. We've submitted LOs. Nothing has landed quite yet. So we continue to pursue opportunities there. We are under contract or approaching, we're under LOI. We should be under contract hopefully by the end of this week on a 24 unit townhome deal in Allentown. So we're excited about that one. And just to, I guess, elaborate on our strategy, we do focus on a syndication model where we raise capital from retail investors, typically $50 to $100,000
Hmm.
investments, if not a larger check writer, and provide passive investment opportunities for those to invest alongside of us while we do all of the work, and they enjoy the returns and routine updates from our team on how the property is performing.
Yeah. And let's unpack that a little bit, guys. If you are, a lot of folks that enjoy our programs here are active rising operators, as you and I are, Scott, right? But there are people that are watching perhaps, or might want to watch this recording, that are maybe considering real estate investing as an activity they'd like to benefit from, but they don't have the time, right? They just don't have the time, the wherewithal, the knowledge, whatever it may be. There are legal ways for people to put their capital, whether that be their retirement account, their cash, whatever it may be, into deals like the one that Scott is under LOI on. That's just for letter of intent, and that means he's about to go under contract and he'll be committed to buy the property. And I've looked at the deal; it's a phenomenal deal, great opportunity. So that's something that a passive investor can join Scott on. And let's be clear, when I talk about passive investing, that's the kind of thing Robert Kiyosaki talks about, right? Robert Kiyosaki in Rich Dad Poor Dad is not talking about being a Matt and Scott. He's talking about making a living being in the I quadrant, which is someone who invests with Matt and Scott, right? And so the conversation is, how can you put your money to work and then make a living off of the work your money's working for you with, right? So this is something that anyone can join Scott on this venture that he has. We'll make sure we get Scott's information so you guys can hear more about it, because I love the Allentown market. Scott, you already mentioned it is a subset to New York City. It's becoming a commuter town to New York City in that, because it's way more affordable than New York is. Let's say that. What else do you love about Allentown? Why Allentown, Pennsylvania, of all the markets you could be working on in the U.S.? Why have you chosen Allentown, aside from the proximity to New York
Yeah,
and
well,
Philly?
we love really the whole Lehigh Valley for a number of reasons. It's a big meds and eds hub. It's a big logistics hub.
Yep.
It's got growing workforce for all those reasons. It is. There's one stat that I like. I think it's you can get to 50% of the U.S. within an 8-hour drive of the Lehigh Valley. So that's one of the reasons that makes it a big location for um, a lot of warehousing recently. So there's been a lot of warehousing development, creating jobs due to the fact that it's such a logistics hub for the Northeast. So that, in combination with the meds and eds, makes it a really great, diverse economy. So not all of the jobs are lumped into one bucket, which we really like, and we typically look for that in other markets, which Columbus, Ohio shares that same trait, I'll say. So due to that, there's
Yeah, and
also a
just to
steady
unpack one thing, right?
growth in
Um,
population over time, and affordability is still there, as you mentioned.
So just say it back. I'll say it back to you. 50% of the U. And I don't want all you guys writing comments or whatever. He didn't say 50% of the U.S. geographically. He said 50% of the U.S. population is within an 8-hour drive of Allentown, right? And that is brilliant, guys. Think about that for a second. Not everybody lives out in Wyoming. Now, a lot of people live in California, but that's way far apart. What if you were able to pick a city that was driving distance to a large part of the U.S. population, which a lot of which is in the Northeast, and a lot of us is becoming just south of that D.C. corridor as well, down 95, right? And so it's really interesting that you got a market that go north, a lot of the US population's there. New York City, Boston, all of New England. Those are heavily densely populated areas. And then head south, the growing cities like Charlotte, DC, Raleigh, Richmond, all those markets that are blowing up right now are all just down the street, proverbially, from Allentown, Pennsylvania. I also like the affordability that you highlighted there too. Certainly an affordable, unfortunately, Scott, markets that are affordable don't stay affordable for long as more people start to move there. But we can't control that part of it. But what we can do is invest in markets that are affordable now. As more people flock to affordability, they're going to increase rents, absorb any vacancy we may have in properties that we have. So those are great markets to participate in. We participate in Lancaster, Pennsylvania, which is kind of arguably it's not as accessible to New York and whatnot as you're talking about. So Lancaster is kind of out in the middle of Pennsylvania. Allentown's maybe arguably a better market than Lancaster is. I give you that one. But so those are great reasons why Allentown's amazing. Give us a little bit of a teaser real quick. This deal that you got, townhomes, what do you like about it? I get it. We're not fully under contract yet, but people can reach out to hear more. Tell me in a couple of minutes, what's so amazing about the deal? How'd you find it? Give us the goods here.
Sure. So we found it through a broker relationship that we have. We have other assets in the market. So that certainly helped that we were awarded the deal. It was an on-market deal, so there were plenty of other eyes on it. We got it under asking price, and I believe I was told by one of the brokers that an offer came in after ours that was $100,000 higher, but they liked us more as buyers, so they stuck with our offer and believed that I think we had a more likelihood to close. So that was exciting. Yeah, I mean, we know the market. We've got strong property management in the market where we can execute our business plan. We see upside in this deal for the 5 to 7 year hold that we have planned. So we have a renovation plan to come in and renovate units as leases expire and tenants move out. So as they do that, we'll come in and make updates to the interiors, kitchens, bathrooms, floorings as needed. There's not really a consistency renovation plan that we've seen so far, but pretty basic renovation plan from an interior standpoint. And then exterior, we might need to replace some roofs, which we budgeted for, but those are normal CapEx expenses that we account for ahead of time. And we like the location. It's right next to a public park, which we hope to work with the city with to improve access to and kind of beautify the property along that section of the property, and then spruce up the landscaping and the block as a whole. So the property actually does take up an entire city block, and it butts up to this park, which is really nice. It's a dead end street that shares alleyway access basically to this park. So yeah, we're excited about coming in and improving the interiors and exteriors of the property, and hope that the tenants see that value as well. But there's a lot of upside, especially as far as the market goes in rents. These are townhomes with garages as well, so we like that. That usually warrants a premium in rent. We're also considering adding some amenities like laundry. Currently, they have hookup for laundry, but it's not supplied by the owner currently. So those are some areas that we can capitalize on and provide value and warrant an increase in rent as well.
Where we've had luck there, Scott, is we've had luck renting the machines to the tenants, meaning like we'll go get them from, for example, Rent-A-Center, right? And we'll negotiate a below market price from Rent-A-Center for those stackable washer dryers. And then we charge the tenant for the machines once they're in, so the tenant gets the value, but I don't have to be in the washer dryer machine repair business. So if that washer dryer breaks, the tenant, they're going to call you and your property manager anyway, and then the property manager is going to turn around and call Rent-A-Center. I know there's better companies than Rent-A-Center out there, but they're going to turn around and call them and say, hey, your machine is broken, versus your property manager have to call in companies like Appliance Doctor or something like that. Which, believe it or not, man, appliance repair is big money. It's like $85 an hour. These appliance repair companies get. So we had a property in Lancaster that we ended up doing that in because we found that like 40% of our maintenance repair bills were because of washer dryer disrepair and the tenants not using the machines properly, or just the machines, because when we bought the building, it came with a bunch of machines, and then they weren't new. So we ended up doing, Scott, we ended up selling the machines to the tenants in that. And so then it became their machines, you know, and then when they moved out, they
Yeah.
take the machines with them, you know, or we buy them back from them when they left. Right. So and I want to highlight one more thing. The townhome model I love, because tenants in a townhome tend to forget that it doesn't feel like like apartment living, right? It's not like they're in a garden low rise, which is very clear apartment living. You hear every word your neighbors say, that kind of thing. Townhomes, if they're built properly, can feel
Right.
like residential house, like a home, right? You can raise a family in a townhome, you know, and I'm sure you got families in there, and families statistically stay in their unit for longer than you know, single individuals do, or that kind of thing. We're getting to the top of the hour, and I need to bring it home anyway, guys. Scott, phenomenal deal. Love the idea of a job that pays your bills, that you guys can, and talking to listeners here, but to do what Scott's doing, to have yourself a career that you can control the time that you put into, that also puts you around people that might want to join you in your long-term wealth building goals of real estate investing. Take that home, listeners. That's a great arrangement, that if you don't like what you do for a living, maybe that's something you can gravitate into, right? And secondly, you know, Allentown, PA, so I'm not trying to create any more competition here, Scott, but great market. Love what you guys are doing there. Can't wait to see where you guys land with this deal. For folks that want to pick your brain, hear more about the deal or about your company, you know, for whatever reasons that may be, how do people get a hold of you guys, of you and your partner, Todd?
Yeah, you could go to our website, summitcap.co. I'm also on LinkedIn, Instagram, Facebook. You can find me, just search my name. Should be easy to find there.
Could you please, just for a minute, could you please just tell the audience listening why you enjoy the DeRosa Accelerator program and why you recommend it?
What I love about the Accelerator program with the DeRosa Group. So they've got a great platform through school with tons of educational content, videos, resources, tools, spreadsheets, checklists, everything that you need to educate yourself. But really, it's for me, it's access to Matt and his team, and he does have a big team, each with their own specialty that we're able to almost tap into via office hours, and you know, them making themselves available almost as an extension of our business, to where we can learn from them, bounce ideas off of them, and you know, leverage their expertise and the resources that they've built out almost as an extension of ours. So I feel like that in particular has been very valuable to us, especially in getting this last deal under contract. And of course, there's also a group of other investors in the group where you can network, and you never know where some of those conversations might take you, whether it be a future partnership or, you know, really just another opportunity to network and you know, expand professionally.
Sweet, thank you. And guys, just here's a little teaser, right? Scott is about to go under contract on a deal, and we pulled aside our marketing director, who's going to sit down with Scott in a live office hour session for many of our students to sit and watch, you know, the next steps. Once you guys get a deal under contract, really, Scott, real estate investors tend to, like, you know, covet the deal, right? But as you and I both know, because you've been around the block many times as well as a real estate investor, once you get a deal, the work begins, right? The work is not finding the deal. Finding a deal is like looking for work to do. Then you get a deal, then the work starts. And so Jess is going to be going and giving any professional advice that she can to you and your partner on what you guys can do to fully fill that deal up and down with equity, get lots of attention and eyeballs on the deal, have a phenomenal webinar and everything like that. So those are real things that we do in our office hours and in the accelerator program. Is we have, you know, real life opportunities, real life examples of something's happening to a specific student of ours. Let's go and drill in, and other students and our DeRosa team members pour into that person so we can, you know, help them make success that much more attainable for them. So really excited for you and your deal, and to see if our marketing director can, you know, take you to school a little bit and show you how we do what we do, so that you guys can have this thing fly off the handle when you're ready to launch it.
Yeah, excited. Running active capital raise and DD. So, you know, it'll be like drinking from the fire hose for the next 60 days, but looking forward to it, and, you know, looking forward to getting the deal across the finish line.
It's and Justin, my business partner, asset manager, and I know you've learned a lot from him too. He would say that once you guys close and buy that deal, then the work really begins. You know, yeah. And a lot of people pop champagne
Yeah.
once they close, the champagne really pops once you've fully executed your business plan. Property's performing as well as it is, and you're cashing rent checks, and so are your investors. So best of luck. Let's get that website one more time, summitcap.co for Summit Capital. Check out Scott Cheek and his partner Todd Silence and hear more about their Allentown deal and all about what they're doing in the Lehigh Valley. Sweet. Scott,
I appreciate it, man. Let's do this again when I don't have this major delay.
Yeah, I'm going to buy you an Ethernet plug for your computer for Christmas. All right. I'll see you later. All right. Thanks for joining us today, Scott. See you. Guys, great conversation with Scott. Really, just to take a few things home, right? The way to structure your daytime activities, right? You could have yourself a job that sucks you out 9 to 5, maybe even 60 hours a week. That's going to take your eyes, your attention, and your energy away from real estate investing. Or you could find yourself something, as Scott has, that you're able to just fully own your time and put in enough time to keep your employer or partner in that work, if you're an independent contractor, happy, and get enough to pay your bills. That could be a realtor. That could be a lot of different initiatives out there in the independent contractor world, so you can keep your bills paid, your lights on, and you spend the other time that you have building your real estate portfolio and tackling phenomenal townhome deals in Allentown, Pennsylvania, Scott has. So make sure you check out his website.